Okay, welcome everyone. Stock market technical analysis. We're going to get right into the charts. Leave me a thumbs up if you guys find some value. Uh, and we'll get right into it. Starting off here with Triple Q. So obviously they gapped it up this morning and they're rallying, throughout the day they're rallying. However, what I'm kind of watching is this level right here. If you look here, it's about 322. We're slightly above that right now. Day's not over though, so this is a daily chart. We want to see that day where it's going to close at. If you get the daily close above this 322, then I think it's likely they're going to rally this up to fill the gap up here at about it's about 330. Looking at the hourly chart here, you can see that was the gap, right up in here. That's, about 330 to 331, somewhere right in there, there's a gap. And if they're going to get the daily close up here, then I think it's likely they're going to rally it up and fill that gap. So in the short term, that could be, that would be bullish, obviously, for a rally. Potentially from where we're at right now, a rally of another 2.5% or so. But that's the short-term picture. Doesn't mean it's going to happen. Again, the daily close is important. If this rolls over and fails back below that 322, then all this really is just a test of resistance and an overshoot, and then we're going to roll back and fail. So again, watch that daily close. I don't know where it's going to close, but we got to watch that. The other thing to kind of note is, clear downtrend basically. You've got lower highs. Here's a high. There's a lower high here. And as of right now, if we fail right in here, we've got a lower high as well. So it's just something to look for to see how the market closes. Oftentimes when they're trading around key levels, they'll make it look like it's going to do one thing and then it does another. And so look for that selling to come in. If the selling doesn't come in, maybe it wants to rally and fill the gap. So those are the two possible scenarios on the shorter time frame. If you look at the larger time frame, though, I'm still going off of this big bearish rising wedge. And the wedge was really, right in here. This is your big bearish rising wedge, signaling a trend change is likely. We had big negative divergence on the daily chart. So again, everything is set up for more downside. And I think that will play out for a move down to 300. I don't see a change in posture around that. Whether they rally it up and fill the gap, then it rolls over and fails down to 300, that's possible. But again, we're trading below the trend now. So again, sell the rip. That's kind of what this market looks like. You're going to rally, but to me it looks like sell the rip. And just to give you an example, when you have, here's just the nearest example. Let me get rid of that line here. The nearest example right here. Look how the market went. This was a correction, from the high to the low. This was a correction of about 15% or 14%, we'll say. And look how this behaved. You got the initial sell-off here. Then you get this kind of chop consolidation zone where, you rally up to resistance, you fail. You rally up to resistance, and then you fail more. So as you zoom in, you can see that's really all that we're doing. We get the initial sell-off, you rally, you fail, you rally. So this could easily roll over and fail here and continue down to that 300 area. I think that's more stable support. We're likely to get a more sustainable rally. But, I don't see that rally. I still see more downside. Let's just put it that way. Also, if you look back, we can probably find some more examples. Back here, kind of. Not so much in here, but you get the sell signal. Let me zoom in. You get a sell signal, you rally, then you sell off more, you rally, then you sell off more, then you rally. So every sell-off comes with rallies. That's just typically how it works. Markets don't just move straight down. Only usually at the end of a move do you just see sustained panic selling like this, where it just sells off straight down. Usually when you start downtrending, you're going to sell off, rally, and just trend lower over time. And so, to me, I think that's what we're doing. You sell off, maybe we rally up to this 330, then we'll sell off more. And that's how I'm treating it. I'm not adding to any shorts here. What I prefer to do is add as we start to get a daily close back below this 314. So we get the daily close back below there, then I think it's very likely we're heading down to this 300 area. And so I could potentially add to shorts on a break of support. Otherwise, it's objective, I guess, to add all the way up here at this 330 area. That's a potential place to add. We also could rally all the way back up and make a slightly new high and hit this trend line, this broken trend line right here. We could rally up, hit the trend line from resistance, make a new slightly new high, and that would still be a divergent high. You know, if we did it anytime soon, we would rally up, making a new lower low in momentum. So it would be somewhere in here, and a new higher high in price. That would be a divergent high. That is a potentially good area to add to. Or take a starter short, you know, or establish a short if you haven't done so yet. But as of right now, I'm looking at opportunities to sell the rip. So areas to add either on breaks of support or back tests of major resistance. Okay, SPY. So you can see SPY, nothing's really technically changed on the bigger picture. We're still, you know, we had this bearish rising wedge right here. We got a breakdown. We did a back test. We started to sell some more. We're kind of back testing again. So it's just we're in this consolidation area right here. And as of right now, I just, you know, I see more downside because there is bearish divergence on the RSI and the PPO. And we are basically testing this trendline resistance, which is this blue line, which goes all the way back to the 2009 lows. If you look at the weekly chart here, it goes all the way back to the 2009 lows. So we held support all through here for a couple of years, broke support, back test, failed, and we're back testing again. So we're still, you know, technically on the bigger picture, we're at major resistance. We have bearish momentum going back to the daily, bearish momentum on the RSI and the PPO, and we're just getting a little bit of a rally today. So just, you know, you have to throw out your emotions. Usually people get extremely bullish on up days and they get extremely bearish on down days. That's just how it works. They see if they're bullish and there's a rally, they're happy, and if they're bearish and it's selling off, they're sad, and they trade that way. And the reality is that I see this as just really just a kickback rally. And, you know, until I see a technical change in the chart, which obviously that could show up, and then at that point in time, then, you know, you have to change your thesis. But I don't see a technical change as of today. So think about just the last few days when it was selling off. Everybody probably thought everything's going to sell off. And now when it's rallying, everybody probably thinks, oh, there's not going to be a sell-off. You know, people would get very emotional based on the swings of the price. But technically, I see this as, you know, still going lower. If you look at the hourly, in the short term now, we're still making lower highs. You can see lower high, lower high, lower high, lower high. And even today, we haven't made a new high. So if we roll over here, it's just continuing that downtrend of lower highs and lower lows. And that's all that's what the chart tells me that this is going to do. Until I see a different change in the chart, that's how I assume it's going to trade out. So let's look at the long bond, the TLT. I think that's really the market's. Everybody's focused on this right now, so clearly, it's become market consensus to at least pay attention to the TLT and interest rates. So interest rates dropped below the 1.5% a little bit, and obviously I think that's where the rally today is coming from. However, in TLT, at least on the daily, I don't see any bullish divergence. You can see here we have negative price action, negative momentum, making new lower lows on the PPO and the RSI, and negative price action. So I think it's very likely that we see some sort of additional drop in TLT. We get more selling, you know, back below the previous lows, really back below this area of about 138.50. We get some more selling, spiking the interest rates back over 1.5% on the 10-year, and that starts another market sell-off. And if we do that anytime soon, we'll probably start to put in that bullish divergence on the TLT, signaling that the long bond is actually going to catch a bid and move higher. Bonds moving higher is most likely a risk-off play, so everyone will be selling the market and buying safe haven assets such as bonds, and that would be, you know, if we see the bonds rally, anything substantial, then that's likely what's happening. So I don't see anything in the chart that, as of right now, that tells me TLT is done selling off. We'll look for that bullish divergence to start to show up, though. If it doesn't, well, then as of right now, I see just lower prices. It's just TLT hit major support the other day. So this is going back to 2011. You can see we have a support here. We hit it there. Hit it right through there. We broke below it briefly through here. So it's not the end all be all from a trend line, but you can see we pretty much fell right to it. And this is where we're starting to get some reactions, because there were several reactions in the past decade around this trend line. So I think it's it's normal to see some reactions. The market's kind of taking a breather and rallying on the fact that bonds aren't selling off, like crazy today. So that makes sense. But if the bonds continue to sell off, rates will rise, and then you'll likely see the market start to sell off again. So Apple, for the most part, Apple is the reason why the market's rallying today. I mean, everything's strong. It's a broad-based rally, so we can't knock that. But Apple's up, 5%. That's a huge move for the world's largest company. And it has the potential to really drag everything else up through passive flows and whatnot. The thing is Apple, we have resistance right here at 126.38. We're kind of starting to break above that. So if that's going to hold and we're going to get a close over here, then I think it's likely Apple's going to run up to this level of about 130. About 130. I think we'll probably overshoot it just a little bit, pop it, and then get rejected there. You can see here on Apple, that's where this was former support right here. And we clearly held it as support right here. We undercut it, and then they recovered it. Then it gapped down below that, rallied up to it as resistance, overshot it a little bit, but still failed, and then down it went. So a back test, that's your next major level of resistance. I think we head straight into that. Maybe overshoot it, because this rally is pretty impulsive and strong. So obviously I think we're going to probably pop it a little bit, but then fail right in that area. If we don't fail here, and let's say we are able to break above this, then you've got this downward, you've got this trend line right there that Apple has been walking up, and we could do a full back test of that trend line. I don't think we're going to get that high and that far in the rally, but obviously that is possible. Again, we got to watch that bond market to see what it does. Right now, the bonds are rallying a little bit with stocks over the last couple of days. But if bonds continue to sell off, then we are going to see, we'll see the rates rise, and I think we'll start to see the tech stocks start to roll over again. Obviously, bonds are down today, and rates are rising today. But look for, look for bonds to continue to sell off. That's kind of really what I'm looking for. One thing to look at next is this tan. As you get kickback rallies, so this is a very clean uptrend line in tan. We can go to the daily just to point it out. There it is right there. We got a breakdown. So there's your initial sell signal. And now we're getting, back tests basically. So where do we go? Well, right now, if I look at the hourly, we're kind of at resistance right here. This is a level of resistance right where we're basically at right now. And you can see we held that as support, bounced above, then we gapped below it, rolled over, and now we're right to it, back testing it. So we're at resistance right here and right now, about 107. I think it's likely we break down, but again, if we continue higher, then we're probably going to run up and back test this trend line. That is possible. So just watch that level, 107, a failure here. I mean, this is an objective area to short the thing. I think we'll want to see the rest of the market break down as well. So keep an eye on that. But that's the level to watch, 107. I don't know which way it's going to go. It can either fail here at resistance or break above and do a back test of the trend line. So ultimately, I'm just watching what happens at this level. NIO and Tesla, both of them, you can see broken support. There's your support right there. That's your trend line. And we had negative divergence on the RSI and the PPO. We broke support. We're just kind of consolidating just, slightly below that. But again, support has been broken. There's no technical change here. They haven't recovered that support. So To me, it just looks like consolidation before we, move lower. And usually when you see this kind of price action where when you start to correct in markets, usually you'll see big moves down and followed by big moves up. So that's volatility expanding, where you'll see, big rallies and then bigger sell-offs. And so that's kind of what I think we're in right now. We're in just a big rally followed by, last week was a big sell-off week. Today we're getting a big rally. I suspect this rally is going to be followed with more selling. Tesla, again, same thing. Tesla from the highs is down quite a bit. I mean, really from the absolute high up here, if I can grab it, it was down about 30%. And so we're seeing some consolidation. We could rally back up to 782. No, it's about 780. Rally back up to there, but I think that's likely the area that we would get rejected at. So from there, I think we move lower down to this trend line right down here, which is now sitting at about 560 or so. So I think that's the near-term target is about 560, even though we might rally up, hit this resistance before rolling over. And we'll wrap up with gold. So this is gold bullion. You can also use GLD. They're pretty much the same. And so gold is at the area where I think the buyers should be at, right here. Basically, any lower, if we go any lower, we're going to start breaking some bigger support areas. So gold, a couple things I want to point out. If you look at the PPO, as of right now, we have bullish divergence. See how we're not making a new lower low than before? We're still higher than the previous low, and that's on lower price. So this is a divergent low, telling me that this is the area where the buyers should be starting to step in at. On the RSI, you'll see it's kind of an equal, though it's just starting to kind of tick below it. We'll see how the day closes. Maybe they're going to burn through the bullish divergence on the RSI. It's really close. And so any more downside, and they will burn through it on the RSI. If we rally here, then this will have proven to be confirmed bullish divergence. So I wouldn't necessarily step in until you see that confirmation. Confirmation would come in the form of, bouncing here and watching the RSI turn up and the PPO turn up. If you look at this daily chart, we have potential support on this trend line coming off the May 2019 lows. Here's your COVID drop. We had a reaction there, and we're coming into that area where this could prove to be support. So that's really what I'm watching for is, do we hold in this area and bounce, or do we fail and continue lower? That's all I got for this video. So again, even with today's rally, there's no technical changes in a lot of these stocks. There's no false breakouts or bear traps. I don't see anything. All I see is a bounce, a rally in pretty impulsive rally, which to me, when you see big strong rallies like this, typically those come in corrections or bear markets. The strongest rallies oftentimes come in bear markets. So to see such an impulsive rally does signal that there's potential more downside. And I don't see any technical change to that downside thesis. So in the markets, in tech and SPY, I don't see it. I see a break of support. I see a bounce rally, and I see lower prices coming in the future. Until I see a change in that, that's how I'm going to stay with. I'm going to stick with it. Thanks, guys. Appreciate it. Catch you guys on the next one.